Good afternoon, everybody. Happy Sunday. It's April the 10th. I'm your wealth guy. Let's talk money. Let's talk Sunday market preview for the week. But before we jump forward, we need to jump back, take a look at what we saw last week. Hopefully gives us some direction as to what we can expect in the coming week. So let's start with the 10-year yield. Earlier in the week, we saw the markets pull back quite aggressively to the downside. As a result, the 10-year yield ticked up extremely aggressively. Now, I did make a warning video about that, indicating that if we see continued or multiple days in a row where we're seeing 2.5%, 3%, 4% increases in the 10-year yield, that might be a warning sign for a market pullback. Luckily, we didn't see that happen. Instead, what we saw is a gradual increase after that initial spike, a gradual increase to the upside, where now the 10-year yield is currently sitting at about 2.65%, which is fine. What's happening is the 10-year yield, or the market for it, is starting to factor in another Fed rate increase. And we're going to probably see somewhere between a quarter point to 50 basis points. I'm leaning more on a quarter. Regardless, not going to make too much of a difference. As you know, my whole opinion on inflation and whether or not the Fed is actually trying to reduce it. Even from their own mouth, they said that inflation is going to go up, and it's actually part of their strategy. But in any case, what else did we see last week? Well, markets finished up on Friday, which is great. Thursday, we saw an aggressive swinging of the market, but still finished well into the green. Both days, markets, although weren't fantastic because of the early week pullback, ended up pretty flat on the week, which is a great sign. I was looking for a little bit of a pullback here. We did get it earlier in the week, as I mentioned. I still think that the markets are due for a pullback, even if it drops another 2-3% before moving back upwards. It's fantastic because we did have that initial run-up that was great. Other areas to look at. So crude struggled to hold $100 last week, partially because of the U.S. reserves being pumped out. Today, crude is currently sitting at about, at least West Texas is, just shy of $98. I do continue to feel that crude will move aggressively to the upside. In fact, we have analysts saying as high as 150, and in some rare cases, I've seen reports of 300. Now, not quite sure about 300. Is it out of the realm of possibility? No. More likely, we're going to see $150 per barrel, and I don't think that's going to happen. I don't think it's going to take too long before we actually see that. In fact, I'm pricing it into my personal portfolio as a result. What else did we see? So we just covered crude and the energy crisis. So right across the board, we saw energy continue to move to the upside. Especially we saw uranium make a little bit of a swing at the end of the week there. We also have a food crisis. Taking a look at agriculture, and I'm seeing it right now live on my charts. Agriculture ticked very well to the upside, pretty well right across the board on Friday. In some cases, we were seeing, for example, orange juice was up about 3.5%. Oats were up 2%. Right across the board, commodities pretty well sat about 2.5% to the upside on Friday, with the exception of a few crazy ones like lumber was up 6.33%. And we also saw palladium, which was up about 9% on Friday. So very aggressive moves to the upside. I still think commodities are going to tick higher. Inflation will continue to force these assets to the upside. And as markets start to change and money comes out of equities, they have to go somewhere. It doesn't disappear. I think you're going to see an eventual transition into commodities as this next cycle of commodities continue to push to the upside. Still, one of the areas we did hear a lot of last week was a recession. And I'm going to touch on that just very slightly. I've always believed that we've never really come out of a recession as far back as 2008. I still think we've been in a recession the entire time. Yes, there have been good times and bad times, but overall, I think unofficially, the economies have never fully recovered. Even though the numbers tell us slightly different, let's be honest, the numbers are always changed in terms of their calculation. So I don't really give too much credence or weight to any of the numbers that are being reported. However, we can just go outside and see exactly what's going on with our economy. One area I do want to focus on is the food price index, because the food price index is currently at an all-time high. That is the price of food currently on the rise. So as futures continue to go up, inflation continues to beat up on the middle class. The one area that they aren't focusing on, even though they talked about it, I think it was last week or the week before, it was reported that spending is to the upside. The truth of the matter is that money is coming from debt. People are using their debt to keep up with inflation. It's the truth of the matter. We can take a look at numbers for debt right now. We are at all-time record highs for individual debts, never mind governmental debt. Inflation's not going to ease as a result either. So you can anticipate that more and more people will continue to leverage debt to continue to make purchases, which will continue to erode the middle class. Not going to get into that too much today. What else did we look at? Well, gold ticked to the upside very aggressively on Friday, up about $10, which is about 0.5%. Gold is currently sitting just shy of $1,950, holding these $1,900 values very well over the last little bit, partially because of the hawkish view by the Fed last week. The dollar index is also higher, which is nice to see, but it's all the relative value. It doesn't really make a difference. Your dollar isn't actually getting stronger in this case. It's all relative, so comparatively to the index, as opposed to the actual value towards inflation, which we know is eroding at an accelerated rate. If we take in a factor, I believe I saw a statistic earlier today that talked about from the original inception of the current version of the US dollar, it is only 3% of its original value. 3% of its original value. Silver finished a little bit in the red, currently sitting just shy of $25. Ideally, I'd like to get it back over $25 or see it jump back over $25. That could very well happen this week, depending on how the markets look. It is a short trading week, so I'm not really expecting too much, although we are kicking off earnings week this week with the banks reporting first. Speaking on that, let's touch on this week. So looking ahead, the 10-year yield is obviously going to be a top priority for me. With banks reporting, I'd like to see the 10-year yield and its reaction. If we do continue to see a move to the upside, that's obviously going to be very good for the banks. Might not make an impact for this reporting season, but will certainly make an impact for the next one. Currently, as I mentioned, the rates on the 10-year yield are about 2.68%. However, I do feel that 3% is where the market really wants it to be, maybe even 3.5, but we're probably not going to see that until later in the summertime. As I mentioned, earnings seasons have kicked off will kick off this week, primarily with the banks. Banks have taken an absolute beating this week. I believe they're down about 10% overall, maybe 11. And the truth of the matter is, we're probably going to see a little bit of a bump here because I expect earnings to actually be quite strong. It's a bank. They're always strong. Energy, I expect to start to move up. We're going to see a continued gradual push from crude. I don't know if we're going to break 110 necessarily, especially with a shorter trading week, but I do anticipate it's going to hold these levels very well. Some news from about mid-late March. Saudi Arabia did say that they're willing to trade crude in the yuan. Iran has also said that they're willing to trade in their own currency. So we're seeing a pullback from the petrodollar, or the US-backed oil. And this is actually very concerning. We'll talk about that later this week because I do have a video coming out on the central bank digital currency that I'd like everybody to take a look at. But let's continue with this week because we're running too long with this video. Markets should go up this week with earnings. If it goes down, and earnings aren't that great, we can expect central banks will eventually step up at some point later in the quarter and either not increase rates at the level that they want or continue to buy assets, which they're going to do anyways as far as buying assets are concerned. Now, if we take a look at cryptocurrencies are holding their levels well here. They're slightly green over the last 24 hours. Bitcoin essentially needs to hold over 42. Ethereum needs to hold over 3K. Critical numbers here. If they can hold these values, it is a positive sign for cryptocurrency right across the board. Gold, I am watching gold again this week. I'm watching energy this week. I'd like to see a continued upside move here. Not expecting too much outside of the banks, primarily because that's where earnings are going to be. And again, it's a shorter week. Keep an eye out for my video on the CBDC. And if you like what I have to say, please subscribe, share, and like. That's it, everybody. I will see you this week for the CBDC.